Good morning, this is the pre-market report for 21st March 2022. Before we delve into today's trading plan, yesterday I released a video on ITC and I'll be releasing many such one-stock videos in the coming days, which will be basically shorter in the time frame and focusing only on one equity. So if you haven't watched it, then do watch it. Now coming to today's trading plan, basically the SGX Nifty indicates a gap up. This will be basically the third consecutive gap up in the Nifty, and if you look at the past 3 to 4 weeks, the gap up gap downs has been nearly 90% of the days. So today's gap up, it's indicating it's so far 17,394 versus the close of 17,322. So basically we'll have to see how much of this gap up sustains till 9 o'clock, because at one point over the weekend it was a 17,500, I believe, and that has been eroded down to 17,393. Now the one thing people have to realize, we're very bullish on the stock market right now, is that we're gapping up into a lot of resistance. Like if you look at the Nifty futures right now, basically, whichever time frame we look at, just without even putting the quant levels, we're gapping up into resistance. Okay, the daily chart, the gap up will have, most will say we have broken the 50-day moving average clearly, but now when you look at it on an intraday time frame, 3 and 4 hour chart, any gap up will be trying to breach, let's say, the 4 hour, the 200-day moving average. So now that's going to be a problem. And on the weekly chart, we have reached the 20-day moving average as a resistance. So basically, we can see the 20-day moving average did reject the index from rising here, and it had slightly gone above up to 17,803. So now we have to see whether the same occurs again. Now coming to the Bank Nifty, it's the same scenario. The Bank Nifty only is capping up into a lot of resistance. The 200-day moving average on a daily chart, and the 50-day moving average, and 200-day moving average on both the 3 and 4 hour charts, and the 20-day moving average. Only positive for Bank Nifty is 20 goes to cross 50, but I believe that is what is fueling the gap up. Post gap up, we can basically expect the index to have some turbulence. If it does not have a downturn, at least some turbulence on the way up. Now when we come to the intraday time frame, to half an hour. Now basically you can see this is what I was saying, gap up number 1, gap up number 2 consecutive. These 2 days it stayed okay, then it was a gap up there again. So this today will be the third consecutive gap up, which can be a sign of exhaustion. And if you look at the Nifty, okay, it has broken way above the change of polarity line of mine, but the Bank Nifty, still with all the gap ups, has not been able to break the change of polarity line I spoke about in the first video I made of pre-market. So now this is going to be the real challenge. If we look at it without the quant levels, any gap up will have to manage to break the change of polarity while also clearing the resistance at up to 37,322. So this is just on a basic candle time frame. This is going to be the killer zone for the index as of now. Now if we come to quant levels, because we can give us a more accurate view of where to short, go long and everything. Now for 21st March, 17,410 is the first resistance I've given, which will be, according to me, after the gap up. If we have a initial spike, it will test 17,410, and then you would manage to break that 17,490 to 17,525, which will be a major resistance zone for the index, and 17,608 and 17,690. Basically, I expect this to be the killer zone mainly for the index if it does manage to clear 17,410. Support for 17,265 to 180, 136 and 008. Climb to resistance front, basically 36,790, then 37, then 36,920, 37,050, which is going to be, according to me, a pretty tough zone for the index to break. If it does break that zone, then this is the next tough zone for the index. The support front 36,390, 36,249, 35,990 and 35,725. Hence now seeing everything I am sharing, how I will trade it is once I will let the gap up play out initially for the first 15 minutes, and I will be looking for any weakness to trade it. I'll be very cautious on going long in the morning because we're gapping up into a lot of resistance on the simple candle front, on the quant front, on the moving averages front and everything. So I'll be very cautious on going long. If I see any weakness, then I will short the index, but I'll also will use a lighter volume today initially, because unless I see the fall is going to be putting the pedal to the gas. Anyway, that's it for today. Thank you for watching, and do like and subscribe to the channel.